Welcome back, everybody. This is Peter Schiff doing the Peter Schiff Show today. Hopefully you guys enjoyed my brother Andrew, who did the show on Thursday and Friday, and Michael Pinto, senior economist at Europac, who did the show Monday. I was down in Nassau in the Bahamas. As I said before, I was participating in the anti-Davos economic forum down there that Mark Skousen holds every year. He has a much bigger gathering, Freedom Fest in Las Vegas in mid-July. Last year he had about 2,500 people there. He's trying to hit 3,000 people going to Freedom Fest this year. I went to the very first one. I've gone to, I think, all but one or two. I think initially he started doing them around July 4th, and I had a problem because I always like to spend the 4th of July. I had plans. It was hard to go. Now that he pushed it back later in the month, it's been a lot easier for me to go to Freedom Fest. Anyway, I am back. A lot has been going on in my absence, and I certainly have a lot to talk about. You know, I'm traveling again this weekend. I'm going up to Salt Lake City. It shouldn't cause me to miss any programming, though. I'm going up there for an event hosted by Independent Caucus. Independent Caucus endorsed me here in Connecticut when I ran for U.S. Senate. They endorsed a lot of other candidates that were more successful than I and are now serving in the U.S. House of Representatives. And I'm going to, a retreat over the weekend to speak to these freshman congressmen who were endorsed by Independent Caucus to educate them a little bit about economics and the real problems that we face, because we face significant problems. Apparently, most people in Congress are clueless. You know, one of the news stories that we have now is the potential shutdown of the U.S. government if the Senate does not sign on to the continuing resolution or that the House passed, or the new budget the House passed, and if Barack Obama does not sign it, the government will shut down. Now, this whole argument really is ridiculous. Think about what the Republicans have done. They have passed a budget with a total of $60 billion in cuts. $60 billion. We're talking about a budget of $3.7 trillion where the deficit is $1.6 trillion. And all the Republicans could muster in the House was $60 billion in cuts. Now, they tried to do $80 billion, but other Republicans said, no, that's way too deep. We can't cut $80 billion. That's impossible. So even the Republicans won't go any higher than $60 billion. Now, the Democrats and the Senate are saying, oh, no, this is too draconian. We can't cut $60 billion. So now you have the full spectrum of debate in Washington. You have the Democrats that want a $1.6 trillion budget deficit. They don't want any cuts in spending. And you got the Republicans that want a budget deficit of $1.54 trillion. So that's the spectrum. It's, there's a big debate between should we have a deficit of $1.54 trillion or should we have a deficit of $1.6 trillion. That's it. And they're actually arguing over this $60 billion. They're actually talking about shutting down the government over $60 billion. Maybe if this was $600 billion, there'd be something if it was 10 times as big. But think about this. Even if we were talking about $600 billion in cuts, $600 billion, 10 times what they're arguing about, we'd still have a $1 trillion deficit for the current year, even if they cut 10 times what they're arguing over. I mean, talk about, this isn't just rearranging the deck chairs on the Titanic. This is arguing about where to put them. You've got the Republicans that want to move them over from the promenade deck to the Lido deck, and the Democrats want to keep them on the Lido deck. Nobody is talking about the fact that the ship is sinking. This whole thing is a farce. Now, of course, I don't know. They're all talking about who's going to get the blame, if the government shuts down. Because remember when Newt Gingrich tried it briefly back, I guess it was 94 or something, Bill Clinton came out the winner politically, and so now it's political brinkmanship between the Democrats and Republicans. Who's going to get the edge politically? Who's going to get blamed for the government shutdown? Who's going to get credit for avoiding it or credit for the shutdown? Meanwhile, no one is talking about the fact that the deficit is, in fact, out of control, and these $60 billion in cuts which is all the Republicans would agree to, and which is too much for the Democrats, are not enough. It's peanuts compared to what we actually have to do. I also want to talk about the markets because, last week on my show, for Monday, Tuesday, and Wednesday, I kept talking about the silver breakout that I thought was imminent. And I was looking at the charts, and it was trading right around $30 an ounce, right near the highs, and we were consolidating in a narrow range right near the highs. And that's a very bullish technical pattern. What we were doing was exhausting all the selling. The buyers were there, but they kept running into the sellers. But there wasn't a lot of downward pressure, so the buyers were strong, but there was a lid on the price because there were still sellers. And I was waiting for the breakout, which would have been the point at which we exhausted all the sellers. We exhausted the sellers on Thursday morning, the day that my brother hosted. We broke through. We're currently trading at about 32.5. We were closer to 34 at one point early last night before we had a sell-off. We were certainly above 33.50. So we have decisively broken out in silver to new 30-year highs. We've taken out that resistance that was around the $30 level. And we've also taken out a key level on the gold-silver ratio where silver has broken out relative to gold. Now, again, to me, this is very bullish for both gold and silver. Recently, I think gold's been held in check because I think some of the people who have been maybe going long gold and short silver, people were shorting silver near the highs and hedging it by going long gold. I think you've got some unwindings of those spreads. So I think you're going to see both metals, though, because I think silver doing better than gold is indicative of a bull market in precious metals. Now, some people might think, well, it's all just because of what's going on in Northern Africa or the Middle East. It's what's happening in Libya or stuff what had in Egypt. That's not it. Certainly, those are catalysts, but silver broke out before any of the stuff that was going on in Libya. Gold, I don't think gold has even had that big a move. I mean, gold's up about $12, $13 today. Gold isn't even at a new high. So I don't think this is really tension-related or safe haven. I think this is just a continuation of the trends. These markets would have moved up anyway. Now, certainly in the crude oil market, you can say that we're trading about $95.50 right now in crude. We were as high as $98.50 last night. We're up about $6. We were up a lot higher earlier last night. You can certainly say that the catalyst for the breakout in crude is what's going on in Libya and potentially in other areas in the Mideast. But that's not why crude prices are rising. Crude prices were rising anyway. We were going to break out. I've been forecasting that on this show for weeks that I thought crude was going to rise. It's just looking for a catalyst to break out, and it found one. But if it wasn't Libya, it was going to be something else. The market is going up, just like all commodities. In fact, the CRB today is at a new multi-year high. We got above 350 earlier this morning. We've pulled back just below 348. I'll look at my chart. Some of the standout new highs. Coffee, a new high today. Cocoa, a record high. Other commodities are not quite at records, but they're moving. Obviously, the move in crude today having an impact on the CRB. Anyway, the music is playing. Don't go away. We got a lot of interesting stuff to talk about today, including a great guest, Thomas Sowell, coming up at 11 o'clock. So don't go away. You're listening to The Peter Schiff Show. Especially if you're living in Wisconsin or Indiana, be particularly interesting to hear from you to get more of a local take on what's going on down there. I will be talking about the situation developing in Wisconsin and spreading in a minute. I just wanted to get back a little bit to what I was speaking about before the break, oil prices. So oil's up at around $95 a barrel right now. I think we have broken out of the congestion. I think this move will take the price of oil above $100 a barrel. I think between 100 and 103 before we might run into a little bit of resistance and maybe some selling. But I think it's a breakout. I think the trend is higher. I think $150 a barrel, which was the high back in July, I believe, of 2008. That is the target. We have a shot of hitting that price between now and the end of 2011. Certainly if there is any real supply disruption out of the Middle East, we can go there in a heartbeat. But even if that doesn't happen, I think prices are headed quite a bit higher on the CRB, which I mentioned earlier, had broken above 350. I think 365 around there is the next short-term price target, with many of the commodities will be making new highs. And again, the media keeps trying to blame this on foreign growth. They're saying that, we're importing our inflation from the rest of the world when it's actually the reverse. It's not growing economies that are causing commodity prices to rise, but growing money supplies. This is not a coincidence. This is a consequence of the monetary easing. And this is exactly what I said was going to happen. The reason that I've been predicting higher commodity prices wasn't because I thought the global economy was going to grow. It was because I knew the money supplies were going to grow, that we would create inflation. But as long as the government and the media confuse the cause and the disease and the consequence, we're never going to solve the problem. In fact, it's going to actually be worse. What I expect Ben Bernanke to do as a result of rising commodity prices, particularly gas prices, I think we're going to have a $4 a gallon unleaded gasoline by the summer, maybe even closer to $5, but certainly above $4 a gallon, in my opinion. I think what the Fed's going to do is they're going to interpret this data. They're going to say, this is deflationary. This is going to slow down the economy, so we need to be easier. We need more quantitative easing. We need to print more money to offset the contraction that we're going to get, the drag on the economy from higher oil prices or higher food prices that will act as a tax on the consumer. It will diminish their ability to buy other things. Therefore, we need more stimulus. And so instead of trying to put out the inflationary fire that they lit, they're going to pour gasoline on it. And so prices will keep rising. And again, it'll be more of the same. Oh, no, we need even to print more money, and we'll blame it on economic growth abroad. We'll blame it on the speculators. We'll blame it on all sorts of things, the weather. Certainly we can blame things. Now we got an earthquake down in New Zealand. Maybe we can blame rising commodity prices on that. Who knows? There's always stuff that's going on. Meanwhile, another interesting development is the dollar is really not strengthening. I mean, the dollar index is at 77.70 right now. It really didn't go anywhere to the upside on the events in Egypt. It had really no bounce at all over what's going on in Libya or any place else for that matter. Certainly the dollar as a safe haven, as a flight to quality, it's losing that appeal. It is not getting that bid that it traditionally has had. Now, I've always argued that that was wrong, that was kind of a Pavlovian reflexive move. But I think now people are starting to realize that it makes no sense to buy the dollar in times of uncertainty or that, in fact, you should be selling the dollar. But at least that hasn't happened yet. The dollar is basically flat. But the fact that it's not rising, I think, in and of itself is very significant. Anyway, but I think the real story that erupted in my absence is what's going on in Wisconsin. And I think this is really big stuff. This is going to spread throughout the country, and certainly it's going to get worse, the protests, when it's the federal government that actually has to start doing the cutting. But right now it's just the states and only some states. You've got, obviously Republican governor over there who is trying to reduce government spending, in contrast to the Democratic governor here in Connecticut who wants to increase taxes. And I think you're going to see a big contrast between the two approaches, because Wisconsin, if the Republicans stick to their guns, will be successful in reining in their deficits, whereas Connecticut will completely fail, because no one is going to succeed by increasing taxes. In fact, that's counterproductive. You're going to hurt your economy and worsen the problem, particularly if you keep on spending and not recognize that the spending is the problem. Now, you've got right now all the teachers in Wisconsin who are protesting, who are calling in sick so that they can protest. And I got a lot of sound from a lot of this. And not only is it the teachers, but apparently the Democratic legislatures have fled the state so that they don't have to be in the state and have to vote on these proposals. I mean, can you imagine how the media would be crucifying Republican legislatures, if they were derelict in their duties and fled the state and refused to vote, so there'd be no quorum. I mean, of course, there's no outrage from the liberal media when it's the Democrats that are doing that, and also about the signs and the protests. I mean, calling the governor, comparing him to Adolf Hitler. Yeah, I mean, it's just like Adolf Hitler, right? I mean, Adolf Hitler, gassed 6 million Jews. And the governor of Wisconsin, wants to take away collective bargaining for teachers. Yeah, I guess that those two things are pretty similar. So why not compare him to Hitler? Where is the media outrage? You remember if there was when the Tea Party would have a protest, there'd be one sign there that would have, and it wouldn't even be a Tea Party guy. It'd be somebody influencing the Tea Party to try to give him a bad name, and the media would be all over that sign. I mean, you got plenty of signs at these protests here, and not a peep out of the mainstream liberal media about the inappropriateness of these signs. Because what's going on? It's the people, the teachers are demanding the ability to be able to continuously bargain for higher and higher wages. The problem, the reason, I think the average teacher with pay and benefits now in Wisconsin is earning over $100,000 a year. So they're highly paid civil servants, and Wisconsin is broke, right? The taxpayers can't afford to keep paying teachers this much money, so they want to reduce their rate of pay. They want them to have to make more contributions to their own retirement, to their own health care. But the governor also wants to put an end to this collective bargaining process that is the root cause of the problem. And it has to be ended. And it's important that the governor stand tough for the future of Wisconsin taxpayers so that they can't be held hostage routinely to the extortion from these public sector unions. And I'm going to go talk about this a little bit more after this commercial break and why this is different than private sector unions and collective bargaining. Anyway, don't go away. I know I've got your calls. I will take more calls after this break. Before the break, I was talking about this collective bargaining. And the real sticking point, it appears to be the rights of these unions to bargain. And I've said many times on this show that government workers should not be unionized. They should not be allowed to collective bargain. Now, people would say, well, why? People have that right. If you want to be in a union, then go work in the private sector. That's the bottom line. If you want a union job, then work with the private sector. Because here's the problem. You see, when there's a union in a private sector, you've got the company, right, management or the owner that is negotiating with the union, the employee. So you have two sides that are actually opposing one another, trying to come to a compromise. That's not what you have when you have the labor unions negotiating with the politicians that they help elect. They give money to their campaigns, they vote for these guys, and the payoff is that when it comes time to negotiate, they give big increases routinely to the state government workers that help elect them. So you can't have that. You can't negotiate with the politicians that you own, who owe their seat to your contribution. The unions expect the payoff. They know, hey, we helped elect you, so make sure and give us a raise. And the government knows that when they give these union workers raises, that part of that money is coming back to their campaigns to help them get reelected. So we've got to break this cycle, which means we have to take that power away from these unions. It is not fair to the taxpayers because the person whose interest is not respected in these negotiations are the taxpayers who are having to pay these outrageous salaries that get higher and higher and higher every year. And of course, in many cases, when it comes to teachers, the pay is without any regard to merit. In fact, the teachers' unions fight off any efforts to link pay to merit. You have the tenure. I mean, this whole thing is ridiculous, and it has to end. But I think what's really more ridiculous is some of the interviews that have been taking place on the airwaves with the Democratic senators who have fled the state of Wisconsin so that they don't have to create a forum so that we can vote on these cuts. Take a listen to what this one guy, Carpenter, had to say on Hardball with Chris Matthews. This is cut one.
How long is this going to go on? How long can you stay in Illinois collecting your pay as a member of the state Senate out there and not report for duty, if you will, in the state capitol? How long can you morally do this? Do you think you can do it forever?
We'll do it as long as it's necessary that the governor and Senator Grothman come to their senses. I'm dealing with thousands of emails, contacting my constituents on my iPhone, not to plug a commercial, but I'm in touch with my constituents and know exactly what's going on. So I'm working probably 10 times harder than the Republicans were this past weekend.
All right, listen to this. Here's another guy. This is Halpern. This is on Fox Business with Stuart Varney. Here, listen how he answers that question. Cut 2.
State Senator Jim Halpern is one of the missing Democrats. He's on the phone with me now from an undisclosed location in Illinois. Sir, the teachers, they're going back to work tomorrow. Are you?
Well, we will go back to work, Stuart, and we're working now with today's technology and mobile office. We're all at work every day here in Northern Illinois talking to people like you and our constituents and groups, me having meetings on a regular basis. So we're working.
Yeah, and here's a little bit more of that conversation. Play cut number 3.
Under what circumstances will you cross the state line and go back to Wisconsin? What's the circumstances under which you would do that?
If Governor Walker or Senate Republicans would withdraw the very harmful repeal of worker rights that they have inserted into the budget repeal, we'd be back in very short order.
And if he doesn't do that, are you prepared to stay out indefinitely?
No, I don't think that's the case. We need to draw attention to what is in that budget repair bill, to the extent to which the governor is offering some pretty harmful stuff to Wisconsin workers, and we'll decide when our point has been made, when we need to return.
All right, so listen to the nerve of these guys. Why aren't they all fired? Here's what they're saying. We're going to collect our paychecks. We were elected to do a job, and we're not going to do it. We're just going to decide on our own. We're going to prove a point. We're just not going to show up for work. And they're trying to rationalize it. Well, you know, we're still working. I mean, we're using our cell phones and our laptops. And can you imagine if in the private sector, some work people, you know, your employees and private sector employees just decide that we're not going to go to work today. And if their boss says, hey, where are you? Hey, don't worry. I mean, yeah, we didn't show up, but, you know, I got my cell phone. I'm returning some of my messages. So, hey, I just don't feel like coming in. You know, in fact, I don't even know when I'm coming back. I just want to prove a point. I mean, how long would they keep their jobs? Why aren't these senators getting fired? I mean, there's got to be some kind of rule that you just can't say, hey, I'm not going to show because I don't like what's happening. So I'm leaving the state. I'm fleeing the state. And by the way, keep sending me my paychecks. I mean, this is where is the outrage coming from the media over this kind of attitude? I mean, it really is quite shocking. Why? If someone can call me and tell me why can't? I mean, can you, if you're elected, does that mean that you can't be fired? That you don't actually have to? You could just take a vacation. You can go skiing. You can go to the beach and just say, hey, I took my cell phone with me. I'm talking to constituents, so I'm working just as hard as anybody else. I mean, give me a break. Anyway, let me take some of the phone calls. People have been waiting on hold. First up is Stuart calling from Florida. Stuart, how are you?
Peter, can you hear me?
Loud and clear.
Hey, it's Mo in Stuart, Florida.
Oh, Mo in Stuart. Now all right. I'm sorry. Go ahead.
I'm a client, a long-term follower and a client, and welcome back. We missed you, man. And Michael and your brother do a great job, but you're one of a kind, dude. So it's good to have
appreciate
you back.
that. You know, some people, I get some criticism saying, hey, you know, it's a Peter Schiff show. Where are you? Well, you know, it's the Peter Schiff show, but I can't do it 5 days a week. I mean, sometimes I can, but, you know, you got other things I got to do. I got to travel. I got other commitments. So I try to do the show as often as I can, but it's hard to do something every single day, especially when you have another job that actually pays the bills. The radio is still a hobby for me because, you know, I got to actually earn money before it's a occupation.
Hey, I hope you're taking care of yourself, taking a lot of vitamins.
Sure. Anyway, what's your question?
I got two questions. I'll try to be brief if I can. Everybody, I made my money, and I'm retired now, but I made my money a lot of it thinking outside the box. And, one question I always have, and I've held gold for some time, but, how do we know how much gold is in there? I know it's been a long time since they really audited the United States gold reserves. I mean, I think the last time was in 2005, and they just audited the statements. But my question is, what if everybody assumes there's less gold. What if there's more gold? We're making a bet on something where we have really no idea what the real reserves are in the United States or the world.
I'm pretty sure that there's not more, because the government would probably claim it if they had it. But, I don't know. I hope it's all there. But, yes, you don't know for sure if it's there or not. But, even if it's all there, it's still highly inadequate relative to all of the dollars that are in circulation today. Yes, we are still the largest holder of gold, but we don't hold any other foreign reserves. If you look at our currency reserves, right, the reserves that we have in foreign currencies, I think it's only about $50 billion between the Fed and the Treasury. That's peanuts. That's nothing. China's holding $3 trillion in reserves. You've got tiny countries that have more, so we need gold because we have no other reserves. And and we have to have something behind our currency. After all, the dollar is still the world's reserve currency, so it's got to be backed by gold. It can't be just backed by other currencies. So we just don't have enough gold, even if we have everything that we say. Anyway, thanks a lot for calling. If you want to stick around, if you're not finished with your question, you can ask the rest of it at the other side of this commercial break. Welcome back, everybody. Peter Schiff here. I believe I'm still talking with Mo in Stuart, Florida. Mo, are you on the line?
Yes, Peter, appreciate it. One other question I had was, this derivative situation worldwide. I've heard there's as much as 700 trillion, and if you figured everything in. Do you have any handle on this derivative thing and how it would affect?
I've mentioned it many times before. The problem with derivatives is the counterparty risk associated with them. There's nothing wrong with derivatives per se. The problem is there are so many derivative contracts that have been written with so much exposure that if certain events happen, those entities that have written these products will go broke, and those counting on these products to offset other risks that they are taking, well, they're not going to be there for them. It's kind of like if you buy fire insurance in case your house burns down, but the company that sold you the fire insurance sold insurance on a lot of other properties, and they don't really have enough reserves in case there's a huge fire. So then there is a huge fire, and they don't have the money to pay, so they go broke, and now you've got a burned down house that you don't have an insurance policy to repair it. So I think there is going to be some huge shocks to the U.S. economy as a result of the derivative exposure that is out there.
Are we talking about 700 trillion?
I'm not even sure. The number is so big that it doesn't even make any sense to try to narrow it down because when you're talking about trillions, it's staggering anyway.
All right, man. Hey, I appreciate it. It's mind-boggling.
All right. Well, thanks for the call and thanks for listening. Next caller up in Toronto is Dan, and Toronto is the site of the Europac Canada office. I don't know, Dan, are you a client of Europac Canada yet?